Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has displayed another round of bearish pressure, adding to the previous day's losses, and remained underneath the level around 66.5 and now focusing on the 65, 90, 95 support. The bearishness came out after the economic release of the Australian CPI eased from the previous quarter which showed less than expected at an annual rate of 7%, down from the 32-year highs of 7.8, while the quarterly consumer price index accelerated by 1.4%, but was lower than the former pace of 1.9. Given the outlook and the dollar index rebounding, the market is focusing on this level of 65.90, which may extend lower down towards 65 cents, where I prefer, due to the fact that the technicals are relatively heavy and the ADX is trending somewhat to a bearish case. So no doubt limited the upside around 66.60. The market should weigh on the support level 65.90 and maybe heading for another 90 points before any rebound. Euro was a little bit on the performance to the upside, or firmer performance that is, after the recent bearish outside range day, posting its second one in the last handful of days. Nevertheless, the market has potentially found a good supply around this 110 area, and I feel maybe heading for a bull trap and therefore looking back towards the bottom side of the range. That awaits the confirmation to the engulfing candle, and a break of 109 figure 10 should expose the region of 107 figure 35 area, while the dollar index has also posted a bullish outside range day which awaits confirmation. That could see a further rise up towards a potential target of 102.60 area, as it currently trades around 101.50. The dollar yen a little bit weaker, but still pressure in this level around 133.5. That could stage a bounce and look back towards that key level of 134.70.80, or around that, the level that recently was challenged. A break above there will give further bullish indication up towards 137 to 138. However, the market is weighing on this support at 133.5, and next support beneath there is seen around 132.60.75. A slight rebound after posting an engulfing candle for sterling. Nevertheless, the market is a little bit hesitant as it climbs towards the next resistant level around 124.65. I'm not feeling the market may actually reject this level, but maybe a little bit higher, close to that 125 like previously, and eventually see a downturn to 123.10.15. However, with the market still rattled after the recent inflation numbers that came in around 10.1, could see a further hike of the Bank of England next month, anywhere from 25 to 50 basis points. Gold found a little bit of momentum overnight after finding the recent safe haven demand returning after First Republic Bank results revealed concerns that the banking sector's health is still somewhat in jitters. After posting its earnings, the market dropped nearly 50%, which is a significant drop, and demand came back to the gold. Nevertheless, if we are forming a shoulder and a head and a right shoulder over here, anywhere around the resistance of 2011-15, then could see it eventually a measured move down to around the 1,920. The market, however, is finding a little bit of momentum around the 1,990, but I still feel that the downside contest is still waiting at 1,958 to 64. Wrapping up with oil, well, since this breakaway gap was filled, the market is finding a little bit of momentum in front of that key level, which is seen at 75, 70, 80 area. I feel the market may potentially, with the bullish divergence coming back into play, that could push a bit back up towards the $80 mark and reassess from there. Well, that's a wrap for the day. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.